Hello, it's Adil bringing you a review of the FTSE 100 from a intermarket analysis perspective. Okay, another interesting week to say the least. Okay, so just bringing you a review of the FTSE 100. Hopefully you see exactly where this market's going from Monday onwards, and hopefully, like I said, I will be doing daily videos on the FTSE 100. Even though I do keep stating I will, hopefully I will get around to it. It's just that as a trader, especially when you're day trading the markets, I swing trade the markets and I also day trade the markets. Swing trading last week was quite problematic. I did share my trades obviously for swing trading, and my day trades were much more lucrative. I ended up with 330 points last week on my day trading, so certainly day trades were much more lucrative and much more successful, although the week before I ended up with minus 20. So the market is very challenging to say the least at present. Okay, so we have central banks that certainly seem very confused and dazed as to what will happen going forward, especially with regards to forward guidance. Okay, so we have the ECB diverging from the Fed, although there was some sort of realignment with the talk of QE4. Okay, and then obviously we have the BOE, which again sounds very confusing because we have over the weekend, just going through with regards to the comments, we have Mr. Weale, interest rates need to rise, BOE should look through inflation, so therefore ignore the low inflation figure that's come through and the wage inflation number. Okay, and then we have Mr. Haldane, who obviously believes in a higher well, basically interest rates remaining lower, and obviously with regards to inflation, Mr. Andy Haldane, who was very dovish. So we have one individual who's hawkish and another chap who's obviously dovish, adding the fact that Rolls-Royce was certainly under pressure, adding the fact that we had Ebola concerns, growth concerns. So there was a lot of factors to digest. Okay, with regards to the FTSE 100 on a Friday, we had a lot of central banks speaking. We had the BOE, we had the ECB, then we had European data, then we had US data, then we had Yellen. So it was a fundamental minefield. Okay, so what happens going forward? Okay, so with regards to the FTSE 100, basically, what do we expect to happen going forward? Now, we had the talk from Mr. Haldane, who was actually Mr. Andy Haldane, who was actually dovish, talking about his renewed stance on BOE policy going forward, i.e. he was dovish, i.e. he expects inflation, or the weaker inflation figure, to force rates lower, or keep rates lower for longer. Okay, so obviously that provided a stimulus to the markets, adding the fact that we had talk of QE4. That certainly added stimulus and impetus to the markets. Okay, so although we did have a weaker Google earnings and Netflix earnings, which obviously didn't weigh as much as the positive factor from QE4. Okay, so they're basically the main variables that were moving the markets with regards to the Friday. And also just bear in mind that you did have the Asian markets down, although the MySex, as you can see on my Reuters icon platform here, the MySex obviously finished positive, which was obviously moving in tandem with global markets, and eventually the US markets did finish positive. But having said that, the Asian markets were down. You had the Nikkei down minus 1.4%, although the Hang Seng was certainly higher, so that was certainly bullish. But there's a lot of questions. Questions remain. Like I said, weak growth concerns from Germany leading the way, and obviously we've got concerns in Shanghai again over the weekend with regards to protesters coming back. Okay, so we have the BOE, especially with regards to FTSE. We have the BOE certainly sounding confused, i.e. conflicting signals. One chap is dovish, the other chap is hawkish, and obviously the economic data has started to turn south. Adding the fact that obviously we've got concerns with regards to emerging markets, and obviously the situation from a geopolitical standpoint of view with regards to ISIS out of control, and obviously socio-economic side of Ebola certainly weighing on the markets as well. Although obviously the QE4 carrot has certainly been dangled, the ECB certainly sound confused as ever. Okay, Mr. Weale obviously opposing ABS and everything else that goes along with it, especially the philosophy or the psychology of QE. So it certainly is hard to read from a fundamental perspective with regards to these markets, okay, but from a technical perspective, let's see if we can start to gauge exactly what's happening. Okay, now let's have a look at the volatility index. This one FTSE one for the FTSE 100. That's an index I tend to review regularly. The week, as you can see, weekly topping tail, quite substantial topping tail there. Daily chart, as you can see, topping tail and reversal. So a bearish engulfing candle, so quite a substantial move and a sell-off. Having said that, though, it is certainly coming into some potential support here now. So if we just utilize simple TA, basically previous resistance equals support, so we are into that region, and obviously previous resistance equals support there as well. So just watch out for the a potential support zone for the VIX, and obviously when it does come into support, that means that the FTSE is into resistance, and that's based on the daily chart. Now let's have a look at a 60-minute chart. 60-minute chart to me looks like a potential HNS, although we do need time for it to brew. Okay, so watch out for that. So there's your left shoulder, head. Okay, now we need to push higher now for the right shoulder before we move lower. Okay, so if the VIX is going higher, that means the FTSE is going lower. Then eventually when the FTSE does trigger this HNS formation, then obviously we can talk about the FTSE moving higher then. But for now, watch out for this pattern. Okay, certainly into support zone here, and expect a bounce in the VIX come Monday. Obviously, given the fact that Mr. Haldane was dovish, and now we have another chap, Mr. Weale, who's obviously now sounding hawkish, and given the fact that the sterling has certainly moved, I mean, let's just have a look at sterling, bring a chart sterling for you. GBP USD. Okay, so daily chart here now certainly seems to be making some sort of pivot low. Okay, given the fact that the lower highs are not as significant as the previous ones, so watch out for this pattern with regards to show you this. Okay, so there's your pattern here. So it looks like some form of falling contracting wedge pattern, which generally is considered to be bullish from a technical point of view, and expect to move higher. If that happens, obviously that doesn't bode well for the FTSE 100. So again, we'll have to observe that and see exactly what happens with regards to sterling. But for this certainly on a 4-hour chart is starting to show signs of reversal. The reason why I say that, as you can see here, you've got this potential lower low, sorry, there. Then obviously the lower low. Again, the market hasn't put in a lower high, as you can see, and we certainly seem to reverse. Now you've got a potential inverted head and shoulders on sterling here. So obviously sterling falling, FTSE going potentially higher, and then obviously sterling rallying, and FTSE obviously selling off as well. So just keep an eye on that. That's interesting. Okay, certainly interesting. So we'll see exactly what happens with regards to this. Okay, and with regards to the sterling moving higher, potential sell-off for the FTSE coming or looming. Okay, and whether or not that's good or bad, again, we'll have to just see exactly how the market reacts. Okay, because there can always be divergences, and the inverse relationship between the FTSE and the obviously sterling can certainly break at any time. Well, given the fact that the markets or traders all around the world are fixated with QE and Kool-Aid, then that certainly relationship will certainly be very important going forward. Okay, now let's go back to our FTSE chart now. Okay, so let's see from a larger time frame with regards to the FTSE 100. So let me just bring up my FTSE 100 charts. Okie dokie, bear with me. Okay, so FTSE 100, let's start off with the FTSE 100. So we've obviously put in a bottoming tail, as you can see. Now a lot of these trend lines are now become redundant. The only one that I'm really interested in is falling expanding wedge pattern. That's the only one that I'm really focused on at the moment. Okay, only one that I'm focused on at the moment right now. So this is the only one that I would certainly keep an eye out for. Okay, so basically we've got a bottoming tail there. It's one hell of a bottoming tail, followed by a bullish engulfing candle. So again, certainly needs to be respected from that perspective. Okay, so let's just see if we can break this down. Okay, so let's just leave that for now. Okay, so basically we have a series of lower lows and lower highs, so that's something that certainly need to take into consideration. What I expect for now is potentially some sort of consolidation, so a potential shift back here, then obviously a breakout. Okay, so that's something that I just need to bear in mind. So I would be erring on the side of bullishness, but if Ebola concerns obviously spread, and further deteriorating economic data, and talk of QE4 dies down, although it did to a certain extent, given the fact that Miss Yellen's inequality speech didn't actually state QE4. If anything, it was anti-QE, that speech. Okay, but given the fact that they've certainly thrown the idea of QE4 out there, that should certainly support equity prices potentially. But again, it only takes any a geopolitical or socio-economic situation such as Ebola or ISIS, and the stock markets can go into a frenzy and a sell-off very, very quickly. Okay, so just bear that in mind. Okay, so but for now, obviously remember, bear in mind Rolls-Royce as well. Rolls-Royce obviously absolutely hammered on a Friday, and taking down the defence sector. I mean, there's an article that I was reading just over the weekend with regards to Royal Mail. I mean, Royal Mail tumbled 7%, deteriorating economic conditions and impact of tighter Russian trade sanctions. More than $2 billion was wiped off the stock market value of the UK defence and aerospace firm. So that's quite a substantial sell-off. Shares closed down 11%. So that certainly doesn't bode well for the FTSE 100. So again, that's something that I'll be focused on. Okay, obviously the retail sector as well, with Tesco shares. Certainly, Mr. Buffett selling more and certainly reducing his exposure. So that certainly doesn't bode well for the retail sector. But which I'll come on to each sector individually. But for now, expect potential consolidation, given the fact that Mr. Weale's comments over the weekend neutralised Mr. Haldane's. And like I said, it's all about the Kool-Aid. Okay, folks, all about that Kool-Aid. And given the fact that oil prices are now into resistance as well, the short squeeze bounce from $80 has certainly factored that in. Obviously, FTSE is a very heavily commodity-laden index, and that's certainly factored that into the equation. Okay, so let's have a look at the US dollar index whilst we're at it. Okay, so let's have a look at the US dollar. Okay, let's see how that's fixated. Okay, so the US dollar index at the moment, 10 minutes, certainly seems to be touching and wants to move. Although on the daily chart, certainly as you can clearly see here, it's a bear flag formation. Look for a potential move lower. And again, that could be based on QE4 talk. So again, that's something just looking at from a fundamental perspective. What could be the catalyst? Like I said, QE4 talk could be the catalyst. Okay, or weaker economic data could be the catalyst. So just bear that in mind. Okay, so looking at a 4-hour chart so you can get a better understanding here. Certainly the 20 MA sloping downwards. Certainly seems like it wants to certainly push lower. So that's something that I'll be keeping an eye out for. Although you do have an unfilled gap above, so we may need to fill that gap first before any potential move lower. So that's something that we'll certainly take into consideration as well. Okay, right. So for now, we do have a lot of unfilled gaps above, like I've just mentioned. Okay, you do have this bottoming tail that's in there for now. Okay, so given the fact that Miss Yellen's speech didn't really trigger anything off. I mean, if her speech of inequality was interpreted as being dovish, then obviously this bull flag here would certainly have failed, which obviously wants to test gap fill resistance up here. Okay, so given the fact that it didn't basically fail and we didn't make a new low, given the fact that all this talk of QE4 and she didn't confirm it, my bias would certainly be strong dollar, and obviously the euro coming under pressure, and or the current Aussie and the Kiwi coming under pressure as well. So that's something that I'll discuss from a different perspective in currencies. But given the fact that obviously you have a stronger dollar, and that means a weaker commodities, and weaker commodities equal a weaker FTSE. So just bear that in mind. So always remember that relationship between a dollar and the FTSE, because obviously all commodities are obviously accountable in dollars, so dollar terms, so or price in dollars. So always bear that in mind. That's an important one. But that bottoming tail certainly seems to be key and absolutely crucial and pivotal for now. So that's another interesting outlook on the FTSE 100. Okay, so keep an eye on the US dollar. Certainly seems bullish for now. Okay, so let's have a look at the FTSE 250. See if we can gauge anything from there. Right, okay. Actually, let's look at the FTSE AIM actually. Okay, so FTSE AIM on the monthly chart certainly seems to be into support. The weekly chart, as you can see, we potentially held support here. Okay, so certainly seems to bode well. Then the daily chart, we have a bullish engulfing candle on the FTSE AIM, which is a strong sign. Okay, so my bias on this occasion here would certainly be bullish, given the fact that we've got a bullish engulfing candle, and obviously we held the pivot support on this region here. Okay, so certainly boding well going into Monday's trading. So initial my outlook will be initial consolidation before we obviously get another push higher. And obviously that's all dependent upon Asian markets, geopolitics and socioeconomics. Okay, this is why I have the day trading setup that I have. I share my trades in real time on the live analysis service. Obviously entry, exit, stop loss, etc. And that's something that you can always join if you want to educate yourself in real time, where I share my trades and analysis and insight as to the news flow and the movements in commodities, forex, bonds, and obviously equities. So that's something that's very important for every individual to do. Okay, so keep an eye on that. That bullish engulfing candle certainly bodes well for a potential reversal on the FTSE 100. Now let's have a look at the FTSE 250. Okie dokie. That's the FTSE 350. So let's just bring up the 250 first of all. Okay, FTSE 250 again, bottoming tail. Okay, so this bodes well. Okay. Given the fact that that bottoming tail certainly has held, we didn't actually have any support in that region other than this support, a previous resistance equals support basically. So certainly a bullish sign. Okay, so I would certainly be interpreting that as being bullish for the market, although we are into resistance for now, and obviously expect some type of consolidation before we do get a potential move higher. But again, that's subject to like I stated, subject to the market itself. And obviously we'll have to react accordingly when the time certainly arrives. But for now, I'd certainly look out for that potential move higher. But it's a bullish engulfing candle, and the red candle on the 15th has been negated. So certainly an argument there for more potential short squeezes going forward. Okay, and this is a level that you probably be looking at is for around 15,000 from the outset. Okay, so let's have a look at the FTSE 350 now. Hopefully get a better insight, better understanding as to where this wants to go. Bear with me. Here we go. Okay, so again, same type of pattern. Okay, bullish engulfing candle, although they do state it's innocent until proven guilty. So for now, as an individual, it's lower lows, lower highs. This could well be a bear flag, given the fact that Mr. Weale's comments are hawkish, and then obviously the market's going lower base than that. So again, that's a potential scenario. So again, we'll see exactly how the market reacts come Monday. Now let's have a look at the smaller time frame now for the FTSE 100. So if I look at the 60-minute chart first of all and explain to you that we do have an inverted head and shoulders formation, the neckline is going to be around the 4070 level. So provided 4270 holds, then obviously the market's probability of going higher to the inverted head and shoulders target. Let me just confirm the inverted head and shoulders target. Bear with me. Okie dokie, so we had the IHS. So the IHS, you're looking at a 6280 minus the pivot low here, pivot low 6080. So you're looking at 6480 on the upside. That's basically what we're looking at from that perspective. Okay, so that's something to certainly keep an eye out for. Okie dokie, so yeah, certainly keep an eye out for that. That's something certainly worth considering. And obviously the market has this downward sloping trend line, and obviously that's around the 6440, 6450 level, and we'll see exactly what happens when the market comes to close that. Okay, so I'll move that, I'll hit that resistance. 10-minute chart on the FTSE 100. I'll just draw this in for you now. Gap levels are here. Obviously it's the same type of inverted head and shoulders formation which is there. Okay, so watch out for that. Okay, but from my perspective on the upside, if you are going to be bullish, then there's certainly two gaps that you need to close. Okay, there's this gap here, and from our trading perspective, and that's basically the one that we'll focus on for the interim. So there's the gap here, and the gap higher is 6410. So we'll see exactly what happens when the market reaches that 6410 level, and we'll take it from there. So yes, like I said, if the 6270 level holds, then obviously we still remain bullish and the market continues its ascent, but watch out for that gap fill at 6400. Okay, that's something certainly worth considering. Sorry, the 10 minute, sorry, here, so after the 10-minute chart, sorry, 10-minute chart is here, so watch out for this resistance level at 6400, and obviously gap fill here at 6430. There's no other gap further up, so that's nothing to worry about for now. The 6390, 6400 solid resistance, inverted head and shoulders pattern. We are into previous support equals resistance. That's something that you'd certainly want to be keeping an eye out for. Okay, the next resistance level will be this region here on the 6335. Then ultimately, like I said, gap fill at 6395, and there is another gap above that at around the 6430 level, and obviously the inverted head and shoulders formation in play. Okay, so can you see how just the FTSE alone, there certainly seems to be one hell of a challenge, okay, as to which way the market's going to go. But based on the pattern that you can see here for now, it's obviously it's inverted head and shoulders. That's provided there's no more concerns with regards to Ebola, no more geopolitical concerns with regards to Russia. It could be Russia, Ukraine. It could be the situation in the Middle East and with regards to the oil price. Or obviously we always know with regards to North Korea knocking on the door, and obviously the ISIS situation as well. So these are all factors that we have to certainly be concerned of. Okay, so that's basically the analysis from the charts and the FTSE. Now let's have a look at the sector analysis, because that should give us a better insight as to which way this market really wants to turn and which way it wants to move. Okay, so let's have a look at the mining stocks. And the mining stocks certainly seem to be overdone for now. Okay, so 10-minute chart certainly seems to be overstretched. The 60-minute chart, you do have a double bottom base that's been put in, so yeah, we will certainly give it respect for that. The trend lines really are not as potent as they once were, so just bear that in mind. Okay, so we just connected these pivot highs, and obviously we've got the pivot high there. Okay, there's a lot of talk now of this potential inverted head and shoulders, so left shoulder, head, obviously right shoulder. So basically you need the FTSE to sell off to create the right shoulder, then watch out above. Okay, and obviously you've got that gap up here that could potentially close, and obviously a double bottom scenario is in on the mining sector. So certainly an initial pullback from the outset, and then obviously the bulls certainly coming charging and coming strong. Okay, going forward with regards to the FTSE, provided, like I said, there's no other additional concerns. Okay, right, understand. Righty then. Okie dokie. Right, so let's go to the next one. Let's have a look here. Okay, so let's go to the next potential sector. Okie dokie. So mobile telecoms. Okay, mobile telecoms, looking at a 10-minute chart, looking at a 60-minute chart, we certainly seem to be overstretched for the interim. Using your Fibonacci tool, we're into the 61% resistance, so you're expecting a sell-off with regards to mobile telecoms. Okay, so there is some bearish news on Vodafone over the weekend, so with regards to higher roaming charges abroad, so that doesn't bode well for Vodafone. That should hit Vodafone the interim. Okay, so 10-minute chart, as you can see, we're at potential resistance, horizontal resistance, and we certainly seem to have based here, so that's certainly a base that's been built. So look out for a potential here for a reversal. That's something that we'll certainly keep an eye out for, and obviously a move higher potential will be the 200 MA, and obviously you've always got the unfilled gap above that needs to be closed. Okay, so watch out for hotel, travel and leisure, and that's obviously dependent upon the Ebola concerns. So again, one eye on Ebola and one eye on this market. Okay, so let's have a look at a few more. Construction, bullish engulfing candles. So again, this can only be the case due to a potential Mr. Weale. Obviously, that he'll certainly be helping the outlook for the UK, and obviously given the fact that Mr. Haldane did talk about lower inflation, etc., etc. So that again could lead to the fact that interest rates remain longer than expected, and obviously that helps the housing market, and obviously that's the reason why you probably have a bullish engulfing candle registered there. So again, certainly more evidence of a potential bottom, but there is obviously an inverted head and shoulders formation that's been forming here, so that certainly needs to be respected. Left shoulder, head. Okay, so again we need to pull back, create a right shoulder before the market certainly starts to move. and obviously you've got the unfilled gap here, so I expect that to close. Okay, so these are all factors that we're taking into consideration. Okay. Okay, let's have a look at the next indices. Okay, I understand. Right. Okie dokie, right. So we've looked at the mining sector, look at the pharmaceuticals. This is an interesting sector to look at the moment, given the fact that obviously we've got this big gap down, and I think there was a Glencore obviously rebuffing its bid, obviously not going ahead with it. So this is certainly a sector to watch again. Okay, so you've got an unfilled gap there, and obviously an unfilled gap there as well. So, and obviously we've certainly neutralized that potential bearishness. So watch out for a potential higher low, close this gap, and obviously we'll have to see whether or not we can close this gap. So have to observe the news flow as it comes. Okay, the banking stocks are going to be very important, although there is some news with regards to banks being fined by some due to forex, etc., etc. Okay, understood. Right, and watch out for this inverted head and shoulders again. This is quite an interesting potential scenario. You have this left shoulder here, obviously head, right shoulder, and we'll see exactly whether that can play out. So again, that's an interesting pattern. Okay, so keep an eye on the banking sector. Again, interesting pattern, but for now, previous support equals resistance. That's basically the junction that we find ourselves in. Oil and gas sector certainly seems to be overstretched for now. Okay, obviously given the fact that oil prices are into the $84 level and are into resistance, so looking for a potential reversal again. But certainly an argument here for inverted head and shoulders, so watch out for that pattern. Again, that will be dependent upon the oil price. Right shoulder needs to go in, and obviously you've got the unfilled gap here. So basically the conclusion, folks, is that we initially need a pullback from Monday onwards. Okay, initial pullback, and then obviously it certainly seems that the rally is on the FTSE 100, given my analysis of everything thus far. And if that's the case, then obviously we've got the unfilled gaps to close at 6,400 and 6,430, which certainly very well could be closed next week, and that's dependent upon fear gauge. It's all about fear with regards to Ebola, a weak growth, okay, and whether or not central banks remain dovish, and it's all about QE4 talk. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye now.